So here are the 4 candlestick patterns that are similar in market structure, and we're gonna see how by just learning one candlestick pattern you can trade all other remaining candlestick patterns as well. Hey guys, welcome back. So today in this video we're gonna talk about how you by just learning one candlestick pattern you can trade the remaining candlestick patterns as well, because all of these are similar in market structure. Okay, they just have different shapes because they're detected at different time frames, but the market structure and the analysis behind these patterns is same. So if you just master one candlestick pattern you can trade all the remaining ones. Okay, so in here we're gonna take this bearish engulfing candlestick pattern as our original pattern, and we're gonna see what are the modified forms of this bearish engulfing candlestick pattern. And if you just master this candlestick pattern you'll be able to trade all other remaining candlestick patterns as well. If you're new to our channel, please subscribe so that you'll be the first one to know whenever we upload new content. So without any further ado, let's get started. So here first of all we have the original candlestick pattern, that is our bearish engulfing candlestick pattern. And in bearish engulfing what we have is the first candle is a bullish candlestick and it has a long body but small shadows. The candlestick opens up here and goes all the way and closes here, and after the bullish candle what we have is a bearish candle. Now the bearish candle engulfs the body of the bullish candle, okay, and it closes below the open of the first candle. So this bearish candle is engulfing the bullish candle, that's why it's called bearish engulfing candlestick pattern. And what it means is that in here in the first candle the buyers are in control, okay, the buyers are driving the market, but after the close of this bearish candle the sellers started to take control and they drove the market all the way down to this level. So at the end of the bearish engulfing candlestick patterns the sellers are the one who are driving the market and they are in control. All these patterns represent the same thing, okay. In all these patterns we will see that the sellers are in control. The only thing important in any candlestick pattern is the opening and closing price, and in these patterns the opening and closing price of all these patterns represents the similar thing, that sellers are in control. Now let's go towards the first modified form of this bearish engulfing candlestick pattern. So here is a pin bar, and in pin bar we know that what happens is initially the candlestick opens up here, the market goes all the way to this level and makes a high, and here the buyers are in control, and after that the sellers took control and drove the market all the way and the candle closes below the open. Okay, now you can also see that the pin bar has a long shadow but small body because there's a price rejection. Okay, the buyers were driving the market initially, but in the end the sellers took control and drove the market, so there's a price rejection. And this if we see the bearish engulfing candlestick pattern on a higher time frame we will be able to see the pin bar. So let's say if this candlestick pattern, this bearish engulfing pattern, is forming at the 30-minute time frame, so if we move our charts to the 60-minute time frame or 1 hour time frame we will see a pin bar, okay, and this represents the similar thing, that the sellers are in control. Okay, and now let's go towards the second modified form of the bearish engulfing candlestick pattern, which is evening doji star candlestick pattern. So if this candlestick pattern is forming at 30-minute time frame, now this evening doji star candlestick pattern, if we go downwards from 30-minute to 10-minute time frame we'll be able to see something like evening doji star candlestick pattern. And the evening doji star at 10-minute and the bearish engulfing candle at 30-minute represent the similar thing, that the sellers are in control of the market and the price has more chances of moving in the bearish direction. So in evening doji star candlestick pattern the first candle is the bullish candle with a big body and small shadows, okay, and the second candle represents the market remained indecisive. Okay, the buyers and the sellers both tried to take control but the price closed at the same level where it opened. And after that the third candle is clearly a bearish candle where the sellers are taking control of the market and they're driving the market towards downward direction. So as I said in the beginning, the only thing important in any candlestick pattern is opening and closing price. Okay, so here we can see that the bearish engulfing candlestick pattern and the evening doji star candlestick pattern have same market structure. They have same opening and closing price sequence. In both of them, the market opens and then closes below the opening price. So this represents that the sellers are in control. Okay, bearish engulfing candlestick pattern at 30-minute time frame will look like a evening doji star candlestick pattern at 10-minute time frame. Now if we go towards a candlestick pattern that resembles the bearish engulfing candle at the same time frame, like if this pattern is forming at 30-minute time frame, and another candlestick pattern that resembles this is the tweezer tops candlestick pattern at the same time frame. So in tweezer tops, the market opens up here and the first candle is the bullish candle with a big body. Okay, the tweezer tops do not have shadow above them, okay, above the candle. So the market closes here for first candle and then opens here for the second candle. The market opens and closes at the same level, and both of these candles have no shadow above them. So after the big bullish move in the first candle, the sellers take control and they drive the market all the way downwards and close the below the opening price. So here again the sellers are in control. So now you can see that all these three candlestick patterns, the pin bar, the evening doji star, and the tweezer tops, the sellers are in control. Okay, and the market is closing below the opening price, and that is what is exactly happening in the bearish engulfing candle as well. The buyers are in control initially, but in the end the sellers are the ones who are driving the market and they are in control. So the market opens here and then closes below the opening price, and after the formation of any of these candlestick patterns, the trend has high probability of going in the bearish direction. Okay, so by just mastering one candlestick pattern, you can trade other candlestick patterns as well, and because they have same market structure and they have same trading psychology. So let's say if you see a bearish engulfing candle at the 30-minute time frame, on a 1 hour time frame it will be representing a pin bar. On 10-minute time frame it will be representing an evening doji star candlestick pattern, and on the same time frame it will be resembling the tweezer tops, and all of them represent that the sellers are in control. So now let's go towards the example and let me show you how by just learning one candlestick pattern you can trade the remaining patterns as well. So let me just go down here, and here we can see the formation of the bearish engulfing candle. Okay, and currently we are at 4-hour time frame. So as I said in the beginning that the bearish engulfing candle represents that the sellers are in control. So what that means is after the formation of this candlestick pattern, the bearish trend is going to start. So that is what happened here. After the formation of this bearish engulfing candlestick pattern, the price went downwards to this level. One thing to notice here is that we can also see the formation of bearish engulfing pattern at this level. Okay, here. One thing to notice here is that we can also see the formation of bearish engulfing candlestick pattern here. And let me just point out this zone so that you can see it clearly. So we can also see the formation of bearish engulfing candlestick pattern at this level here. And after the formation of this bearish candlestick pattern, the price did not go downward. So what happened? Okay, and in a similar manner we can also see that formation of bearish engulfing candle at this level. Here we can see the first candle is bullish, and then after that the second candle is totally engulfing the first candle. So this is also a bearish engulfing candlestick pattern. Let me just highlight this. So what was the reason that the price went downwards after the formation of bearish engulfing candlestick pattern here, but it did not go downward here or here? So let me explain the reason behind that. In any candlestick pattern, we do not trade the candlestick pattern alone. Okay, we always look for a confluence or a key level. So here at this level we can see, if we look at the chart in the past, we can see that there is a level forming here after which a lot of supply came in. Okay, and the price went downwards. It gave a big bearish move from here to here. Okay, so this is an important level because after that the price went downwards. So if we see the formation of another candlestick pattern that is on the same level as this, where a lot of supply came in and market went downward, so if there's another candlestick pattern forming at the same level, that has higher chances of going in the bearish direction. So that is what happened here. The bearish candlestick pattern formed here at the same level, and then after that the market went downwards. And here in case of this bearish candlestick pattern, we cannot see or we cannot find any key level in the past data. Okay, after which the market gave a big bearish move. So that's why the price did not go downward after the formation of the bearish candlestick pattern at this level. And in a similar manner, here we can see that the price after the formation of this bearish candlestick pattern, the price kept going in the upward direction or in the bullish direction. So why was that? That was because the price had already broken through a resistance level here, because we can see the formation of resistance level from this and here. So this is our resistance level, and the price had already broken through the resistance level. So after breaking through the resistance, the current resistance becomes support. If the price has closed below this resistance level, it would have higher chances of going in the bearish direction. But after breaking through the resistance level, the price kept going in the upward direction because the past resistance level is already broken, and now the price is gonna move in the upward direction, and this resistance level will become a support now. So that's why after formation of this bearish candlestick pattern above the resistance level did not make the market go in the bearish direction. Instead, the market kept going in the bullish direction. So I hope you like this video. If you have any questions, please comment down below and I would love to answer them. Also, you can join our free Telegram group in which we share forex trading strategies and knowledge about price action. You can also visit our website www.forexbee.co in order to learn more about price action. See you guys in the next video. Thank you.